Ooh baby, cryptocurrency investors just got a big ego boost. Yes, the United States might be creating a digital dollar. President Biden put out an executive order talking about how he wants to start regulating cryptocurrency more and how he wants to start researching cryptocurrency more and how he wants to potentially create a digital dollar. As soon as he did that, the crypto market rallied. We saw Bitcoin rally more than 10% that same day, but then the very next day, Bitcoin and cryptocurrency came back to earth. Now, the United States is definitely not the first country to get hip to cryptocurrency. I mean, we've seen El Salvador adopt Bitcoin as legal tender, and we've seen Ukraine fund their war operations through cryptocurrency. But if the United States adopted a digital dollar, this would be a complete game changer because the United States dollar is the world's reserve currency. And if we have a digital dollar of the world's reserve currency, that would be a lot of legitimacy given to the world of digital assets, aka cryptocurrency. So what I want to do today is talk about what's going on with this executive order, talk about what the executive order says, and talk about what this means and what you should be doing with your money and your cryptocurrency right now. So I spent quite a bit of time going through the executive order and reading the facts sheet that the White House put out and then going through a bunch of articles that analyze what President Biden said, and here's what I've come up with. The executive order essentially says that the government is going to start focusing on three things immediately. The first thing is they want to start regulating cryptocurrency and they want to see how to regulate cryptocurrency the right way. Second, they want to be more competitive in terms of digital assets and digital technologies around the world. And third, they want to work on something called the CBDC, which stands for a central bank digital currency. The United States is thinking about creating a central bank digital currency, aka a digital dollar. But let's start by talking about this first, the regulations. The White House is directing the Treasury Department to go out and start researching cryptocurrency immediately. They want the Treasury Department to go out and start figuring out, is cryptocurrency safe or not? And what should the government be doing to regulate cryptocurrency? And what should the government do to keep consumers safe? That's what the government is asking the Treasury Department and other sectors to do, because they're essentially trying to figure out what is cryptocurrency, how do we keep people safe, and how should we regulate it, not just on the cryptocurrency side, but also on the financial services side. That means on the brokerages and exchanges side. What should the government be doing to provide oversight and provide regulations onto these exchanges to keep users and consumers safe? We've already been seeing the government get really involved when it comes to cryptocurrency exchanges in 2022. The government has been issuing a lot of fines and they've been telling cryptocurrency exchanges what they can and cannot do. The government says that they want to regulate cryptocurrency exchanges for 6 reasons. They want to protect consumers and investors. They want to create financial stability. They want to protect against illicit activity. They want to keep the United States competitive on a global stage. They want to have financial inclusion, and they want to have responsible innovation. So we don't know exactly what that means when it comes to cryptocurrency. The government has already kind of hinted at regulating DeFi platforms because they're supposed to be decentralized platforms, and the government has said that they don't like that. We've seen the government come out and post issues to companies that are giving interest on cryptocurrency. So there are going to be a lot of changes coming in the cryptocurrency world, which is something you want to pay attention to, especially if you have your money in cryptocurrency. Like I've personally talked about how you can earn interest on BlockFi with stablecoins. I still have my money in my stablecoins in BlockFi that are generating interest, but BlockFi no longer lets new users in the United States open up an account to generate interest because the SEC has blocked that. Now I know BlockFi is working on this to see if they can create a new platform working with the SEC to get something approved, but you are not able to open up a new account at this time to do that because of all the new government regulations. And if you were wondering, yes, at the time I'm recording this video, my money is still on BlockFi generating interest. I can pull my money out if I wanted to, but I'm keeping the money there, letting it earn interest, but I can't put any more money in at the time of me recording. And finally, on the regulatory side, President Biden also said that he's interested in monitoring the energy costs associated with cryptocurrency. Now, we don't know exactly what that means, but when he talks about creating more innovation in cryptocurrency and making cryptocurrency more inclusive and smart innovation that might affect the ways that you're allowed to mine cryptocurrency and the energy usage of cryptocurrency itself. Second, when it comes to the competitive side, the executive order says that the United States wants to continue to be a leader in financial and technological innovation, which is one of the reasons why now the government wants to start researching cryptocurrency. And that means that in order to compete, not only will the government be doing their own research in cryptocurrency, the blockchain and digital assets, but they also want to make more agreements with our allies overseas on how to regulate cryptocurrency and what will be adopted as best practice when it comes to cryptocurrency. It sounds like the government is finally starting to get hip with crypto, because what the government said is that they want to be a leading developer of cryptocurrency and they want to be on the cutting edge of blockchain and cryptocurrency. Now, the interesting thing about this is you've had Coinbase, Kraken, and Gemini issue letters talking about why they want to start creating some regulation, because they don't want to be doing things in the dust. They don't want to do things blindly and then have the SEC randomly fine them because they did something that the government didn't like. They want to create an open communication system that way the exchanges and the developers and the companies in cryptocurrency know what they can and can't do. That way they can focus on the things that they can do. That way we can have a more inclusive and open cryptocurrency world in the United States and around the globe. And then we have the most interesting part of the executive order, which is the CBDC. The government says that they want to start talking about a central bank digital currency. Now, the executive order did not say that they want to create a digital dollar, but it did said that we need to urgently start researching the pros and cons of a digital dollar. It used the word urgently. Now, this isn't the first time that we've heard of a potential digital currency. It is the first time in the United States, but China has already been doing this. In 2021, China talked about releasing their own CBDC. So compared to the world, United States isn't the first to do that. So while we haven't launched our own digital dollar yet, the government has said that it is urgent that we start looking into this right now. And this is really, quote, a watershed moment for cryptocurrency. The CEO of Circle tweeted about this and he said that this is a watershed moment for crypto, digital assets, and Web3. And it's kind of like the 1996 to 1997 waking up to the idea of the commercial internet. So it seems like the government wants to move forward with a digital dollar. They just have to do their due diligence. And if that happens, that will create a lot of legitimacy for cryptocurrency, because now that will create a digital version of the world's reserve currency, and that will legitimize digital assets. At this point, you're probably wondering what you should be doing or what this means for you. Should you take your whole bank account and dump it into cryptocurrency? That way you can ride up the wave? Probably not. But there are 5 things that you should be doing right now. First, you got to understand what all of this would mean. Creating a digital dollar does not mean that Bitcoin is going to go to $100,000. Maybe Bitcoin will go to $100,000, but having a digital dollar is not the reason why that will happen. A digital dollar means that we would have a digital dollar. That means that we would have more legitimacy around digital assets, things like cryptocurrency, which could put more money into cryptocurrency, which could influence the prices of cryptocurrencies like Bitcoin. But you have to understand what it means. It doesn't necessarily mean that it's going to directly impact the price of Bitcoin and cause Bitcoin to go to the moon or to Mars when a digital dollar is created. The reason why I'm saying this is because of number 2. I want you to invest smartly. This does not mean that you want to take all of your money now and just dump it into cryptocurrency. That way, when the digital dollar comes, you can ride the wave and trade it for a quick profit and then sell all of your money for a profit. I want you to be a smart investor. Yes, obviously, having more legitimacy around cryptocurrency will help the values of cryptocurrency, because more people will feel comfortable putting their money into cryptocurrency. Having the right regulations will also make people feel more comfortable about investing their money in cryptocurrency. But you have to also be a smart investor, not just a trader that's trading on emotion. You want to be a person that's trading on fundamentals, that's investing in things that you believe in for the long term. Please don't be one of those people that just YOLO your money into cryptocurrency hoping you get rich because you hope that a digital dollar means that the prices of cryptocurrencies are all going to double or triple overnight. Be smart when you do this. If you want to know how to invest your money in cryptocurrency, my team put together an hour-long lesson on how to invest your money in cryptocurrency. It's completely free. It's on our Market Insiders app. It's an investing education app. You can watch the lesson for free on how to invest your money in cryptocurrencies. If you want to watch that lesson, I'll put that link for you down in the description below. In other words, I want you to avoid and be aware of the get-rich-quick scams out there, because there's a lot of scams out there. A lot of people are trying to put their money into the altcoin or the NFT, hoping that they can flip it for a big profit essentially overnight. Be aware of these things. If it seems too good to be true, it probably is. Be aware of the get-rich-quick scams. Don't put your money into those things. Sure, you can make a quick profit, but you can just as easily lose all of your money. I want you to be a smart investor and build wealth sustainably, not just gamble your money away. And the easiest way to invest your money, if you're interested in cryptocurrency, is to do something like a dollar cost average system, where now you're not just trying to perfectly time the market. You're not just trying to buy the dip, because when you're trying to buy the dip, chances are many times you're going to miss the dip. You're going to try to catch a falling knife. Maybe you'll miss it. Maybe you'll catch it. Maybe you'll catch it too high. Maybe you'll catch it too low. You don't know. But to avoid all of that emotion, just create a dollar cost average system where every month, every week, or every day, you're buying some of the cryptocurrencies that you like. I have a daily dollar cost average system set up where every single day I buy some Bitcoin, I buy some Ethereum, and then I buy a little bit of some of the smaller coins. Most of my money in my dollar cost average system is going into Bitcoin. Now, if we were to see a major cryptocurrency crash, then I can come in and buy more aggressively of the coins that I like Bitcoin. But I'm not stressing about the day-to-day swings in cryptocurrency. I'm not stressing about what's happening if it's going up or down, because every single day, whether the market's up or down, I'm buying some cryptocurrency. Now, again, I understand that I'm a believer in cryptocurrency. I know this isn't something that I'm just going to hold on to for 6 months or a year. This is a long-term investment that I believe in because I believe in the power of cryptocurrency. So first, you have to believe in the power of cryptocurrency. You have to understand it, learn what Bitcoin is, learn what Ethereum is, learn what the blockchain is. If you do that, and you believe in cryptocurrency, then you should start buying some of the cryptocurrencies that you believe in. Start with some of the bigger coins, something like Bitcoin and Ethereum. Understand that you might lose money because investing has risks. You're never guaranteed to make money when you invest. You might even lose money. So never blindly listen to a random guy on YouTube. But understand that you might lose money because cryptocurrency is very volatile. It's very speculative. There's a chance that cryptocurrency can go to zero. And then, instead of just perfectly trying to time the market, buy in phases. Create a dollar cost average system where now you're buying in phases every week, every day, or every month. You can pick your own system. That way now you buy in phases. You don't have to perfectly try to time the market. And if you see a big crash and you still want to buy, then you can come in and buy more aggressively. There's a lot of different cryptocurrency platforms out there that will let you do this type of dollar cost average system. If you want to see some of the platforms that I use, I'll put the links down for you in the description. But now that you start investing your money in cryptocurrency, you also want to have a smart portfolio. Because it's one thing to diversify your money within cryptocurrency, but you also have to understand your broader investment portfolio as well, because what you don't want to do is have 100% of your money in cryptocurrency. Now, I know this strategy has made some people insanely successful. It has made some people insanely rich by people putting all of their money into cryptocurrency, hitting the jackpot, and then seeing their small portfolio grow into the millions of dollars. Yes, it has worked for some people, but you have to remember that is the exception, not the rule. I have a dollar cost average system in cryptocurrency. I also have a dollar cost average system in the stock market, where every week I'm investing money in the stock market. I also have a dollar cost average system for physical gold, where every month I buy some physical gold. I'm also investing in physical real estate. I also have my own business. So I own cryptocurrency. I have some diversification within cryptocurrency, although Bitcoin is my largest player in the cryptocurrency part of my portfolio. But cryptocurrency is just a piece of my entire investment portfolio. That's what you need to understand. If you want to be a sound, fundamental investor, you don't want to have cryptocurrency be 100% of your portfolio, because if it is, and the cryptocurrency market crashes, which we've seen happen many times because cryptocurrency is so volatile, it's so speculative, well then your entire investment portfolio is going to be in the red and you're going to be panicking, you're going to be stressed, you're going to be anxious. If you want to avoid all of that, make cryptocurrency a piece of your portfolio, and then you can create some diversification inside of your cryptocurrency portfolio as well. Now, you don't want to dump all of your money into altcoins and to the coins that you hope will go 100x in the next 6 months. You want to have some stronger coins, especially if you're just starting off, because if we see a cryptocurrency crash, the ones that are going to fail and go bust and go wiped out are going to be the ones that are smaller, the ones that really don't have that big of a use case, that don't have as much of a network. Now, I know you might fall in love with the cryptocurrency that you have. You might fall in love with the idea of your cryptocurrency going to the moon or going to Mars. But if it's not doing that, you don't want to just keep going down with the ship if the cryptocurrency is about to go bust. You have to be smart. You need to separate your financials from your emotions, and you want to be a smart investor. That's the person who's going to win 9 out of 10 times. 1 out of 10 times is going to be the person who gets lucky, that just YOLOs their money into the next hot crypto, into the next hot stock. Sure, it happens once in a while, but the rule is different than the exception. I'd rather you put your money where the odds are, and if you like the idea of investing in cryptocurrency, understand how it plays a part in your portfolio instead of making it your entire portfolio. If you enjoyed this video, here's a masterclass on cryptocurrency that I think you'll love, and if you want to get my free lesson on investing your money in cryptocurrency, you can watch the hour-long lesson just by clicking that button below. Thank you for watching, and as always, keep hustling. Everybody prior to the year 2000 thought that the internet was the future and that you would never lose money with the internet because everything with the word